Hello there, my name is Enoch. Taking care of your health should be a top priority. Looking at the various engagements that we have today, it is so easy to forget about our health, mental well-being. That is why we introduce to you the Healthy You Talk Show, a brand new show that is going to address matters concerning your health, nutrition, stress management, mental health, name it. We bring to you a wide range of experts who are going to be touching pertinent issues concerning our health. Tune in every Tuesday at 10 a.m. live on Faith Today TV.
Mountain Moving Faith. This is my latest book. And if you want to learn how you can move mountains, life has many mountains. While this journey, you will encounter mountains and you wonder, how can I move mountains? This is a book to read. And it took me time to research, to pray, and to wait on God and look at the scriptures and what Jesus talked about moving mountains. And this book is quite a story, it's quite an inspiration. It is quite something that will change your life. So order your copy today. We can send it to you wherever you are in this country. We will be able to send this book to you on Mountain Moving Faith. Call that number or send a message and our team will be able to ship it to you wherever you are. There's a book to read. You can also buy for your friend, for a family as a gift. And I have no doubt they will thank you and they will be always thankful for what you have done for them. So God bless you as you read this book, Mountain Moving Faith.
Welcome once again to Kingdom Business Network. Welcome once again to Kingdom Business Network. We are so much excited to be coming to you live and direct from our studios on Faith Today Television. Today, we are going to discuss about finances. We want you to master your finances. We want you to take charge of your finances. And today, we are going to discuss about building wealth. Yes, building wealth with bonds. With bonds, you can actually invest and build some wealth. And to help us unpack that is a gentleman who we have been having this wonderful discussion on finances with, Mr. Tony Alang. Welcome, Tony Alang, and you can introduce yourself to the viewers today.
Thank you, viewers. Thank you, ladies and gentlemen, for having me on the show. It's been a pleasure to have been walking on this journey with you. I'm the author of a book titled Eeney, Meeney, Money and More. And this is the content that we are basing our discussion on. And I look forward to some interaction with you during the show. Thank you very much.
This is a very, very interesting book, and it's a must-have for people who want to make wealth. So with this book, I strongly believe that it will help you to save and to invest 70% of your income. Remember, if you're beginning from somewhere, you must start with savings and investing. And this will teach you how to do it in very, very practical terms. And I would really encourage you to reach out to Tony and get a copy of the book. You know, the wealth, a lot of wealth is actually hidden in books. And people who read books are able to tap into that wealth. My co-host today is Victoriana Alwang'a. Please introduce yourself and also introduce the topic.
Thank you so much, Dr. Mungai, and to our guest today, Tony. Welcome once again. To our viewers, my name is Victoriana Alwang'a. I'm your co-host for today. Thank you for tuning in on the Kingdom Business Network. It is always a pleasure to have you and to be able to have these discussions so that you can be able to grow your knowledge on matters finance and personal growth. So today's topic is an exciting one. We've come a long way. We started on how to save and invest 70% of your income. You learned how to save, and we've taken you through the different ways you can invest. We've gone through stocks, we've gone through money market funds, and today we are going to be delving into bonds. I know sometimes maybe most of you, when you hear the word bonds, you probably think government, but I can assure you that it is very different, and today we are here to help you unpack it. And I look forward to each and every one of you getting out of here with insights on how to build wealth for yourself. Make sure to like, to share, and to subscribe, and keep it locked on KBN. Thank you.
And also remember to send your questions to the number which are on your screen. If you have any question on bonds or finances, Tony will pick that in the second part of this program. We want you to be assisted in any area that you have queries on, so don't forget, just start texting now. Tony, help us understand the basics of bonds. What are bonds and how do they work?
Thank you, Dr. So a bond is a contract between you and whoever you're lending some money that over a predetermined duration of time, they are going to pay you an agreed return, an agreed investment return, interest, or what is sometimes called a coupon. That every so often they will pay you this much, and at the end of that duration or that contract term, they will then give you back your initial capital. So in simple terms, that is what a bond can be described as.
Okay, how do they generate returns for investors? And what are the key terms to know when investing in bonds?
Yes, so what a bond does is when you've gotten into this contract with the person you're lending money to or the person who you are investing in, this contract then spells out the frequency with which you will get your investment return payments. And the common bonds that we are likely to talk about as we go along are giving what are called coupons or the interest payments every 6 months. And at the end of the duration, you then get back your capital investment paid back to you. Yes.
So what are the common bonds and how can somebody access them even before we go too far in the discussion?
Yes, so there are different types of bonds which are all available on the Nairobi Securities Exchange. We have corporate bonds, we have green bonds, we have government bonds, and we also have the fractional investment which we had introduced in our earlier discussion, which is called Akiba. So with the corporate bonds, you're lending to a company that is looking to raise money for expansion or adoption of new production techniques or innovation. With the government bonds, you're lending to the government. With the green bonds, you're lending to a project that is geared towards environmental, investing in environmental projects or environmentally geared projects. And with the Akiba, this was the fractional investment vehicle that was introduced for retail investors that you can now invest a minimum of 3,000 shillings through your phone. So these are the various types of bonds that we currently have in the market.
So Akiba, the fractional one, you can do it with 3,000 shillings. What about government bond? What is the minimum that you need to start becoming an investor?
Maybe I'll go back to what it takes to be able to actually start investing in government bonds. What you need is your ID copy, you need your PIN certificate copy, and you need your passport photo. And you will need these documents to be able to go and fill a form at the Central Bank of Kenya, which then enables you to open your CDS account. And this investing process has actually been made much simpler now because there's an app which you can have on your laptop or on your phone. And once your CDS account is active, you will constantly be getting prompts from the central bank whenever there are new treasury bills or treasury bonds that are being floated, so that you can also place your bid. So you just need to log into your app and then say how much you want to invest, and you choose the duration or the tenor of the bond that you're interested in investing in, and then your bid is actually on the rate, the coupon that you're expecting on that bond.
Okay, and I think also the local commercial banks are also offering bonds, if I'm not wrong.
Yes, there are corporate bonds, and the commercial banks could also assist you with the process of investing in these bonds.
Okay.
Yes.
Victoriana, what's your take on this?
Thank you so much. You've talked about treasury bills, you've talked about treasury bonds, which brings me to the question, what are treasury bills, what are treasury bonds, and what are infrastructure bonds, just to add on?
Yes. Now we start getting into the
thick of it.
Yes. So these opportunities to lend, for example, to government, can be classified as shorter than 365 days and those that are longer than 365 days.
That's 1 year.
Yes,
Okay.
well, that's 1 year, yes. I see Daktari is working. So any investment of this nature that is less than 1 year is what we classify as a treasury bill. So you have a 91-day treasury bill, you have a 182-day treasury bill, and a 364-day treasury bill. And then those that are longer than 1 year are coming in 2, 3, 5, 7, 10, 15, 20, and even more years. So these are what we are calling now the bonds. And within the government bonds, you have a further classification between the infrastructure bonds and what you will call the government bonds. So the infrastructure bonds are floated by the government when they have an infrastructure project that they want to send this money or direct this money to. Yes, so that's where now the differentiation comes. And over and above that, there are tax incentives for the infrastructure bonds. Yes, so you don't get taxed on your infrastructure bond.
Okay.
Yeah.
So how is interest like currently as far as T-bills, that's treasury bonds, bills and bonds, how is it currently?
The rates have been coming down, and what dictates the rates is supply demand, the market forces for supply and demand of money by government. So in the instances when government has a very high demand for this money and the supply for the lending is low, the rates tend to go up, or what the government is willing to pay for borrowing from you tends to go up. And when the government has received offers from their various lending partners to get money and they have available cash, then what they are willing to offer to you as a lender then goes down. I think now the rates are dancing at around 10%. Yeah, that is the annual rate, if I remember correctly, based on what is available in the market. I keep seeing the alerts popping up on my phone. Yes, but recently I've not made any bids.
There's a time I think there was high as 17% for some bonds.
I think in some instances I was making some bids at 18%.
18%.
Yeah, and those bonds are running. Yes, so the rates have progressively been coming down in the last few months.
So for somebody who is planning to invest, what is the advantages of investing in bonds? Why should somebody invest in bonds?
There are various angles which we can look at the question you've just asked. When we started by saying this is your investment pie, we said, what is your investor profile? And then after looking at your profile, you also possibly want to diversify. So you're looking at an asset, and bonds are a very good asset when it comes to being able to predict your cash flow. The predictability on a bond is quite good because you know every 6 months you will get this amount of money. And it's beautiful when you look at your phone and you just see a notice that there's money coming into your account. So that is the beauty in terms of bonds, that they give you a predictable cash flow, or you have good visibility on when your money is going to be available. So bonds are paying coupons every 6 months, and on maturity, you will get your capital paid back to you. Yes. So for somebody who considers him or herself as a conservative investor or very interested in liquidity or a regular cash flow, investing in bonds is a very good consideration to make, especially if the rates are attractive. Yes.
So how is it to transact in bonds in terms of getting in, buying those bonds and selling? How fast can I get my money? How fast can I buy and all that?
Okay, bonds are good, especially when you have a predetermined horizon. You know that you want to put this money aside for 5 years, for 10 years, for 2 years, or even longer. And every 6 months, it will give you some money. So when you're getting in, it's about making a successful bid, because the government is always trying to get the best rates. So what they will do is, of the people who have made bids, they will choose the most competitive bids, or those who are giving them the most favorable rates. And if you're fortunate, you will be within that category. The alternative way is, if you don't want to get caught up in the cutoff, where they set their cutoff mark on the rate, then you submit what they consider as a non-competitive bid. So whatever rate they give is what will apply to your bid. Yes. So the bonds are fairly easy to get in. Once your money is in there, you know it is going to be there for a predetermined period of time. If you do want to get out, then your broker can help you get out by making your placing your bid on the secondary market. And buyers can then also purchase on the secondary market and you exit. Yes. In the event that you don't put your bids on the secondary market, it means that you're going to wait throughout the duration, or through the duration of the particular bond, to be able to exit from that investment. Okay. And with regards to the ease of these investments, we have talked about collective investment schemes. So if you also do want to invest in a fixed income instrument or the fixed income asset class, you can also, for ease of getting in and ease of getting out, get into a collective investment scheme, so that the headaches of bidding, making sure you're getting a competitive rate, etc., are dealt with by your investment advisors. Yes.
Okay. And who is best suited to invest in bonds? What would be that profile of that investor be?
What I would say is that anybody who would like to see a consistent income on the investment that they have over a predetermined period of time would be eligible for the category that you described. And the people that best fit into that category are more mature investors, you know, like retirees, for example. You don't want to get too involved in the workings and machination of how your money is going to generate a return. And the beauty of it also is that the coupons are paid straight into your bank account. So it is extremely convenient. Extremely convenient, yes.
I also see a lot of people who keep money in the bank and the money is yielding very little interest. And then we have the factors known as inflation eating into your money. And here you have an option whereby you can actually be earning something. Can you comment on that?
Yeah, we talked about it in the previous conversation. So collective investment schemes are actually a very convenient way for investors to use the wisdom of investment experts. So you do understand that I want to put money in this asset class, but I don't understand enough about that asset class to start doing the investment myself. So you identify a collective investment scheme that is in the bonds market. These are what we call the fixed income funds. And you say, this is the amount of money I want to contribute to the fixed income fund. And every month you say, this is my contribution, and they will identify the bonds or the bills that they will be putting your money into for you. Yes, so it makes your work very easy. It simplifies your investment, and it makes your entry and exit also very easy. Yes.
Okay.
Yes.
Victoriana, what's your take?
My question is this. By this point, we all know that every investment has an aspect of risk associated with it. So when it comes to investing in bonds, what are the specific risks and the mitigation for these risks?
That's a very interesting question. Every investment you make comes with its underlying risk. So ultimately, if you're investing to the government, the underwriter of that risk is the government. If you're investing in a company, say a corporate bond, the underwriter of that risk is the company that you're investing in. So a lot of people tend to refer to government bonds as being risk-free because the assumption is that government will always be in operation and government will always be able to raise some money, which will then ultimately support the payment of the obligations that are due to you on the bond. Yes, so I could say that in general terminology, investing in a government bond is basically a risk-free investment.
It's secure.
Yes.
Okay.
Yes.
Now, what happens if an investor has to sell before maturity? Do they incur any losses?
You would be subject to the situation of the market at the time. And when you're selling, it is a buyer's market. So you'll be sitting on the opposite side of the transaction. The buyer who's coming to take over that bond is the one who's going to determine the rate at which the exchange is going to happen. So your broker may have pegged a price, but the market is saying they're willing to take your bond at a lower price. So you may have to be willing to take this reduction in what you're expecting. So you may actually sell at less than you would have expected to get from that particular investment.
So then is it advisable then to go all the way to maturity, or let's say you take a 10-year bond, is the advice then to go all the way to 10 years and you're taking interest every year, twice a year? Or if you get an opportunity, you sell, what would you advise somebody?
So as the market is moving up and down based on dynamics that exist in the market, you may want to take a position on an asset. And that position may be because you need cash flow to meet an obligation, or because you want to move from one particular asset into another asset. So you may have money in a bond, but you see there is more opportunity in equities. So you could take an informed decision to take a small loss on your sale of the bond, knowing that you're going to get a better return in your investment in equities, for example. And this is why having somebody with the wisdom on how the market operates is quite good. So in some instances, yes, you may have to sell what you'd consider a lower price than you bought it, knowing that you're either meeting a cash flow requirement or investing in another, what they call taking a position in another asset class, which will give you a better return. Yes.
So what is the downside of investing in bonds and T-bills?
Downside is the returns actually are fixed, whereas the market is going up and down. So in the process of this up and down, you may be losing opportunities in another asset class. You may also be exposed to what are called losses. I'm trying to remember the term. Where inflation is eating into your investment return. So there are instances where, because inflation is also marking the market, and your bond is giving you a fixed rate. So inflation may actually erode whatever your bond is giving you, especially if the rates are very low, in the single-digit range. You run the risk of ending up with no real return on your investment. So those are some of the challenges that bonds may present customers with.
And what's the key advantage of bonds and T-bills?
The key advantage is what we are calling risk-free investment, and you know that this is the cash flow that I'm going to have over this investment duration. So if you take a 10-year bond, you know that every 6 months your coupons are going to find your bank account. Yes. And that maturity, you have your capital back. Yes. Yes. Yeah. So it gives you a lot of predictability, and that's why people like the bonds. Yes.
And I normally see that banks, insurance companies, mutual funds, etc., they are all running into bonds. You as an individual, you get into the same. Are you competing against them? Is there a way you're competing against them, or how does it work?
Like we mentioned earlier, if you put your money in a savings account, you'll probably get a small single-digit interest allocation to that saving. Whereas your bank is putting this same money in the government bills and bonds, probably making a little more, and giving you less whatever they consider their fair return. So if you're able to do that, you'll be able to secure better return. And the easiest way to do it, like we've been saying with each asset class, get a collective investment scheme, put your money in the collective investment scheme, and then let the professionals make the identification and selection for you. Yes.
Actually, for me, one of the reasons why I find bonds and treasury bills quite interesting for me to invest in is the time I realized that when I put my money in the bank, the bank will have to have a way, or normally looks for a way to make a return on the money I have deposited.
Yes.
And what the banks do more often than not is they invest that money. And one of the key areas they invest in is in treasury bills and bonds. So that means I'm giving the bank my money, they're giving me very little, then taking my money and going to invest in bonds and bills. So the question is, if there's an opportunity for me to go directly and do what the bank is doing, I've cut out the bank.
Yes, that is there. What you then lose out on is having your money sitting in the bank.
Yes.
Yes, but if the desire is to create an investment return on your money, then it is wiser to have your money in the treasury bonds or in the treasury bills than sitting in the savings account.
Okay.
Yes.
Okay.
And like we said earlier, you're better off having your money at rest in a money market fund. Yes, and not in the savings account. Yes, so your account should just be the channel through which you are executing transactions, not for investment. Yes.
That's interesting. My dear viewer, we are about to come to the close of the first half of this program, and would really appreciate if you send the questions that you have on finance matters, especially on the area of bonds. And Tony Alang will actually address all your questions today in this program, live and direct from Faith Today Television. Victoriana, what do you have to tell the viewer before we take a short break?
Make sure you tune in when we come back from the break. Make sure you keep sending in your questions. This is a discussion that you definitely do not want to miss out on. Remember to tag your friends, share with them this information so that we can all grow and continue to build our wealth. Yes.
So we are taking a short 1 or 2 minutes break. Please make sure that you stay tuned and please send your questions. I'm waiting for your questions and we'll give you some answers. Thank you.
Okay, asante. Nilikisajili kitabu ambacho kinaitwa 7 Keys to Success, ama kuna kanuni funguo 7 if you like it, ambazo zitakuletea ushindi na kufaulu maishani. Wote, wewe na mimi, tunataka kufaulu, lakini pia kuna njia ya kufaulu. Ukisoma hiki kitabu ambacho nilikiandika kwa kufanya utafiti, kwa maombi mengi, kuangalia neno la Mungu, I have no doubt ya kwamba hiki kitabu kitabadilisha maisha yako. Nilikuwa naongea na mchungaji rafiki yangu akaniambia, nilisoma hicho kitabu, sasa ninafundisha watu wangu kupitia ujuzi, maarifa, hekima ambayo nilipata kwa hiki kitabu. Kwa hivyo unaweza pia nunulia watu wengine, na akaniambia alinunulia hata viongozi wake na wamekuwa wakisoma, wakaweka kwa library yao wanasoma. Hiki kitabu sina mashaka, nina uhakika itabadilisha maisha yako na utabarikiwa. Tuma message ama upige simu kwa hiyo namba na naweza kuwasiliana na wewe na utapata hiki kitabu, utatumiwa, usome na ubariki pia watu wengine. Asante. Mungu akubariki unaposoma 7 Keys to Success and you will succeed. Thank you.
Hello there, my name is Enoch. Taking care of your health should be a top priority. Looking at the various engagements that we have today, it is so easy to forget about our health, mental well-being. That is why we introduce to you the Healthy You Talk Show, a brand new show that is going to address matters concerning your health, nutrition, stress management, mental health, name it. We bring to you a wide range of experts who are going to be touching pertinent issues concerning our health. Tune in every Tuesday at 10 a.m. live on Faith Today TV.
Welcome once again to Kingdom Business Network, and thank you for the short break that we've just had and staying tuned to Faith Today television. We've been discussing money matters, about finances, we've been discussing about investing in bonds, treasury bills, corporate bonds, and I believe that you are already sending a question, already have a few questions. Please continue to send those questions. We don't want to leave you with doubts in your minds. We want you to know what's the next step from here. How do I get in? Because as we keep on saying, your money should be working for you. It's not time to keep your money under the mattress or in an account somewhere, and especially if you don't need it immediately. Please make sure that your money is working for you. And that's how you create wealth. Money working for you. Don't always work for money. Once you get the money, make it also be working for you while you sleep. We want you to have some sleep as your money is doing the job for you. Victoriana, which questions do you have for Tony?
Well, yes. I'm sure you are learning a lot to our viewers, and even as we continue with the discussion, we've talked so much about how to invest in bonds and the documents that you need to be able to set up your account and everything. So is there a minimum amount that is required when you're investing in bonds?
Yes, the minimum investment is 50,000 shillings. Yes. So as you're making your bid, you will see the minimum tranche size as 50,000 on the app. Yes.
That's if you are doing it directly.
That's if you're doing it directly.
But the fractional one?
If you go into what we are calling a collective investment scheme or a fixed income fund, then the fixed income fund will have their rules. And I think currently there are funds taking 1,000 shillings. So even with your 1,000 every month, you can invest in the bond market through your collective investment scheme. Yes.
And I think what I keep on telling people is that some of these investments, it's good to get in so that you start to understand how they operate. It's not the amount of money, but it's to create an investment mentality that you know how bonds operate, you know how mutual funds operate, you know how this and that operates. So once you put your small amount of money, as you start to listen and to be in it, you start to get more information. And tomorrow, who knows, God is going to bless you with a lot of money and you can put a lot of money in it.
That's very true, Daktari. I'm looking here, and chapter 9 in Eeney, Meeney, Money and More is titled Making Money While You Sleep. And I'm just looking for the cover page of that chapter. So here it is. So making money while you sleep. And chapter 8 is where can you put your money. So these are the discussions we are having. And as you look at that, there are certain things you will need to know. A little study, a little research, and as Daktari correctly says, sometimes you can put small amounts of money to understand how these asset classes work. And it also enables you to do what we are calling diversification. Yes, so you can put your money to work, make sure it is not sitting in the savings account, and ensure it is giving you what you can consider an ideal return based on your investor profile. Thank you.
And as we talk about ideal returns, the returns on bonds, are they usually taxed and at what rate?
Yes, you have a withholding tax on your government bonds, and infrastructure bonds are considered tax exempt. Yeah, so you don't get any taxes on your infrastructure bonds. Yes.
All right. And when it comes to investing in bonds, are there any hidden charges that we should be aware of?
With the bonds, I think it's fairly straightforward. There is an investor calculator on the on the central bank CDSE portal, or even if you go into your app, it will show you how to calculate the pricing of the bonds and what your returns are expected to be. So it's a fairly straightforward thing. You put your money in, they'll give you a valuation on the day, and the value given the number of days, and you will then know how much you're getting back based on the coupon that you placed for your bid.
All right.
Yes.
Thank you.
Yes.
Questions from our viewer. Someone is asking, morning team, do I need a broker or can I do it myself?
Oh, that's a very wonderful question. I don't know if it is a he or a she, what their name is, but our viewer can invest in the bonds on their own. As we had mentioned, what you need is a CDS account. Once you've opened your CDS account, you will have the app on your phone, and you can, from the convenience of your phone, make your bids. It's a very simple process. They have a bid closure date. Once your bid is in, you will then get a notification whether your bid is successful or not. And then you'll be given a code also through SMS on how you can make the payment to close the process for making your investment in that government bond. Yes, so it's a fairly straightforward and simple process.
And you can also go through your bank and also through a broker.
Yes.
The choice is yours.
Yes, most definitely.
So you can actually have three ways. You can do it directly, you can go through a broker, you can actually buy it through your bank. I know like my bank do offer bonds and T-bills.
They do, yes.
And from the convenience again of my bank account in that bank, I'm able to actually also get it. Kenneth from Thika, we hear you loud and clear. The question is, assume I invest, can I sell my bonds before it matures, and how does this work?
Yes, we've talked about selling bonds on the secondary market, and this is where your broker will assist you to place it in the market and to close the transaction for you. Yes, so your broker will then receive the proceeds, then make the collections, and then you ensure that you get your capital back,
Okay.
plus whatever investment return had accrued during the period. Yes.
Okay. Someone is saying from Kasarani, says, I'm Neri, good insights. Can I be allowed for flexible withdrawals?
This is where collective investment scheme becomes very useful, because now the flexibility that she's looking for is not available with a direct investment in the bonds. So a fixed income fund or a bond fund will then enable you to have ease of entry and ease of exit. Yes, as well as ease of withdrawals. Yes.
Someone is asking, can you compare and contrast government bonds, treasury bills, and money market fund in terms of which one is easier, which one is better?
We had said when someone is investing or beginning the investing journey, the easiest entry point is what we had identified as a money market fund. And then we talked about the other asset classes. We talked about equities and an equity fund. And now we are talking about government bonds. And the collective investment scheme for this would be a fixed income fund or a bond fund. Yes. So for entry level, I think the recommendation still stands as a money market fund. Yes. Yes.
So someone is saying, I'm Nicholas. If the government is struggling with debt, why should I trust their bonds?
Yeah, and that's the interesting thing about the government. When the government is in more need of money, then they are willing to offer you a higher coupon rate. So I would say that given that we are saying government investments, especially at this point in time when we are talking of bonds, are risk-free, it is a fairly good asset class to put your money in. Yeah, so he could start with a small amount and then see how to graduate it upwards.
I think if I get this, this person is like wondering, is there a situation whereby the government might reach a place that it does not honor the interest on these bonds? Is it a default or something like that?
Yeah, he's talking about default.
Yes.
So the likelihood of default is also very small. Yeah, you're talking about absolute collapse of government. Yes. But what I can hear in his comment is that he may have a preference for other asset classes. Yes. And if he doesn't understand the government bonds as an asset class, then I would highly recommend that if he's investing, he puts just a small portion there, and he can put the bigger part of his investments in the other asset classes that he has a better understanding of. Yes.
Okay. Which raises to me a question. If you are to advise a beginner, and I know you've discussed this a number of times,
Yes.
in the various asset class, somebody who has a very low risk appetite,
Yes.
what would you tell him to do? Or where should they start with, and how should they progress until they reach bonds and T-bills?
So we are going to the whole conversation around investor profile. Yes, you need to understand yourself and being able to understand what assets you're willing to put your money in. So there's the whole concept of risk and return when you're investing. So when you're looking at potentially higher return, you're also looking at potentially higher risk. So we had drawn a pie that had cash, It had stocks, it had bonds, and it had real estate or property. Yes. So for a beginner, these are the asset classes that we would consider looking at. And the entry level, which would be highly recommended, is the cash category. And within that cash category, we were looking at money market funds. So instead of having your money in the bank, you put it in a money market fund, which is a collective investment scheme that enables you to access the treasury bills, which are short-term government instruments, and the bank deposits. Those are the two broad investment assets that you'll find in the money market funds. Yes, so that is where I would highly recommend, if he's at the beginning of his investor journey, to put his money in. Yes.
Victoriana, what questions do you have up to this stage?
At this point, maybe I want to ask, when looking at the other asset classes, we saw different mistakes that investors usually make in investing. For example, like for stocks, we saw how everyone rushes to invest when there is hype on a specific company and the likes of it. We also saw something like being misinformed. Maybe now when it comes to bonds, what are some other mistakes that investors make when they're investing in bonds?
Some of the challenges could include getting carried away and trying to make a bid on a very high coupon rate. So you're always getting locked out. Your money is sitting somewhere, you want to invest it, but you're missing the opportunity to invest because you're always choosing a very high rate. So in order to not miss the bus, you're guided to just give a non-competitive bid. Then there are investors who may decide to make bids, but they don't have money in time. You don't have liquidity to support your bid. Yes, then you find yourself in a challenge that you have made a successful bid with no money to support that bid. So those are some of the little challenges that then present yourself. Because you have your phone there, maybe you're just clicking on it and things are happening. Yes, and then, like we have said, you need to have an opportunity fund, an emergency fund, and ultimately, whatever it is you're investing in, whether it is a pension or you have something that you're gearing towards. Yes, so being able to separate these funds, you have someone who has put their emergency fund in a government bond, then they get themselves in an emergency. Being able to work this money out of the bond means they need to get into the secondary market, which is a possibility. The challenge will be that they might not get the rate that they were desirous of getting in the secondary market. Yes, yes.
Now, kuna maswali hapa, tuingie lugha ya taifa kutoka kwa Roni. Roni anauliza, kuna njia ya kupata pesa yako haraka kutoka kwa bond ikiwa unaihitaji? Maybe Roni here is wondering, yes, we talked about you can easily get your money. I'm looking at this question in two ways. Is there another way you can get that money, or there is only one way of getting it? And might be the duration of getting that money out. What is that duration like?
So I think for Ronnie, I'll recommend a collective investment scheme because of ease of entry and ease of exit. So that he doesn't get caught up in the challenges around either waiting for the 6 months to elapse to get his coupon or waiting for entire duration of the maturity of the bond for him to get his capital back. Yeah, so I'll highly recommend a fixed income fund, or what they would call a bond fund.
So basically, if I get you right, you're saying if Ronnie invests directly, it will become at the point of exit when he needs the money. It might take a few more days, but if it's a collective fund, the collective funds you can easily get in and get out, might be within a day or whatever.
Yes.
Is that what you're saying?
48 hours.
48 hours.
Yeah, there's ease of entry and ease of exit.
Yes.
So for early stage investors, in each of these asset classes, there are collective investment schemes. So before you want to get the challenge of having to choose the asset yourself, try the collective investment scheme. Then once you understand how the machine works, then you can start making the choices yourself and making independent investment.
And these collective ones are basically some companies we established which actually do the investing for you.
Oh, yes.
And the terms are flexible in terms of getting in and getting out.
Much more flexible.
Even the amount of money you put in is retro. But if you're doing it yourself, then you have to bite the bullet in terms of if you have to get out, you have to be subject to the market forces.
Oh, yes.
Okay.
Oh, yes.
Now, someone is asking, how do I avoid getting scammed when investing in bonds?
So, for you to invest in a bond, you need to have your CDS account. And then secondly, you are making your bids via your phone. So you'll get your password, which you have on your phone, and then you make your bid, which is your personal secret. And all these details go into the CBK database. Then when your bid is successful, the details come also on your phone. So you'll get a code, a unique code for you to make your payment. So these payments now you'll make from your bank to the central bank. So it's a fairly structured way of doing things. You know, even when you're filling in that form to make the transmission, to submit the money supporting your bid, the payee is actually Central Bank of Kenya. So if you are not paying Central Bank of Kenya, the question is, who are you paying? Yes. And this is where the collective investment schemes will assist the investors to get to understand how the processes work. Yes, so identify a reliable service provider and begin the journey of investing with the assistance of professional investment advice.
Two more last questions. I'll combine the two because I know we've talked about it, but might be for clarity. Let me combine the two and maybe you can pick what we have not re-emphasized. One is asking, bonds za treasury ni option mzuri. Okay, bonds za treasury ni option mzuri kwa mtu anaanza na pesa kidogo ama kuna better investments. And the other one which is related to that says, can a beginner investor start with bonds or do they need experience? This is Enoch Maura.
So for a beginner investor, it's important to understand that the bond rates will go up and the bond rates will also go down. Similarly, when you're looking at the equities market or the stocks, the prices of the listed stocks will also go up and they will go down. And given this seasonality, even if you're investing in real estate, prices go up and they go down based on supply and demand. So in order for you to be able to understand a lot of these dynamics that are taking place in the market at any one time, it is always important for you to get the advice of a professional investment expert. And that's what we said in our previous discussion. So it would be unwise to circumvent the support that you can get from a professional investment advisor. Yes, so understand your investor profile and identify an investment mentor and an investment advisor. That's what I would probably close off the discussion for those two questions.
Okay.
Yes.
Victoriana, are you now persuaded to start investing in bonds, or what is your thought about bonds and T-bills?
For me now, maybe stick to the other investment classes that we've looked at. But maybe one question before we close off on the discussion. Maybe you can just repeat this for a viewer who missed out on what you have said before. Where can we verify information on these service providers for those who now want to go the way of the collective investment vehicles? Yes.
So the Capital Market Authority is the one that gives authority to any potential service provider in this field. So if you go to the Capital Markets Authority website, you'll have a long list of all these providers. And even in the business pages of your daily newspapers or your weeklies, depending on the one you are reading, you will get the list of the authorized service providers, and they always advertise their services and their rates inside those pages. Yes, and even if you go on the internet and just type, authorized service providers for whichever collective investment scheme you're looking for, you will get, and then, you can do your little research and see how to begin.
All right.
Yes.
I know we have done so much on treasury bonds and treasury bills. When it comes to corporate bonds, where do you find a corporate bond and how do you get into it? Is it the same process? Is it from the same avenue? And when are they available? Are they available anytime?
So corporate bonds are availed through the Nairobi Securities Exchange, and they are available as and when the companies will be looking for fundraising, or when they are raising funds and opportunities to generate some new cash flows. So these, you would need the services of, again, your investment professional, either your broker on the market or somebody who understands the market, who will then guide you that there's an opportunity to invest in a certain corporate bond. This is what they're offering. This is what the prospects look like, and we will highly advise that you put your money in this bond. Yes, so you can get them through the NSE.
Is it in the same way? Are you also easily able to get out through the Nairobi Stock Exchange? Can you sell your corporate bond just like the other bonds?
Oh yes, same way your broker will assist you to get in and will also assist you to get out.
Okay.
Yeah.
So thank you very much, Tony Alang, for that insightful discussion on how you can master your finances in the area of bonds, treasury bills, treasury bonds, and corporate bonds. This has been an eye-opener for many of us, and I strongly suggest to you, my viewer, that start to invest mudogo, kidogo, kidogo, especially in those corrective schemes where you can put 3,000, 1,000 shillings. And the idea here is for you to start to get knowledge and information as far as the available options on how you can invest and where you can invest. And it's as you continue in that journey that you learn more. And as you build your confidence, you'll be able to see how much more money you can add. And with that, I would like to ask Victoriana for some parting shots.
Thank you, Dr. Mungai. Thank you, Tony, for those insights for today. To our viewer, thank you for tuning in. I know right now you're packed with information. You have so many options on where to go and invest. You know where to begin. You know what to look out for in terms of your investor profile and your philosophies. And now we can all begin investing to build our wealth. So make sure you share this information with your friends so that you can continue to grow your finances and to make your money work for you. And we look forward to seeing you again and again. Keep tuning in. Don't forget to like, to share, and to subscribe. Thank you.
Thank you very much, Victoriana. Tony, what is your parting shots? And maybe you can also briefly talk again about the book and how people can reach you or get your book.
I'd like to say thank you, ladies and gentlemen, and our viewers for having me on the show today. And this is a humble way of giving back to society. There are certain things, there are certain experiences we've encountered as we travel on this journey of personal investment. There are certain pitfalls that you may encounter if you jump into the bus without getting professional investment advice. So this book has been structured in a very simple way. Eeney, Meeney, Money and More. How to save and invest 70% of your income. The book is available from the Nuria bookstore. It is available on Amazon. And you can also visit www.tonyolang.com for a copy of the same. And it gives you a journey on how you can then make your personal investment decisions. Thank you very much.
Thank you once again, Tony. It's been a pleasure hosting you for the last number of sessions, and we look forward to continuing with the discussion on mastering your finances, because we want you, the viewer, to make investments decisions from a point of knowledge, point of understanding, we equip you, and this becomes the start of a journey. For those who are already in bonds and treasury bills, I know you can concur with us. That's a good way of investing. So with that, I want to say God bless you very much. Until next time, shalom. God bless you.